Bismillah ar-Rahman ar-Rahim. Today I'm going to talk about the investments. I revised some books related to the investments, and I find this book is interesting. This book related to the introduction to investments for Herbert Mayo. It is an interesting book, and if you ask the details about this book, you can Google and see the reviews of this book. This is chapter 1. Chapter 1 is an introduction to investments. This is a very important chapter because it outlines the main terminology related to the investments. Okay? So if you focus on this chapter, you can take the majority of terms using in the rest of text. Okay, first of all, what is investments? What is investments? What is investments?
Maybe you have money, you want to maximize your money by putting your money in a small business or in a stocks or bonds and some types of investments.
Stocks, you say bonds. Okay, what else? Why people do investments?
To make profits.
To make profits. Okay, what else? Why they need the profits?
To make cash flow. To have a good life.
To have a good life. Okay, what else?
For future.
Let's see.
For future.
For future benefits. Future benefits. Okay, what else? Okay. What? Yeah, Salwa? Yeah.
maybe هو إنه لما تزيد the economy, a country strong and can force another country to.
So you mean to improve the GDP or economic growth? Okay. So this is for GDP. Okay, that's fine. Okay. So yes.
Doctor, some people like Robert Kiyosaki, if he wants to fill a need or live in a luxury life, like buying a luxury car, he creates
Okay,
a
but
business.
buying cars,
Yeah.
houses, okay, and etc. So this is we consider all of these things as goals for investments. Okay. And if we talk about stocks and bonds considered as assets. So people using assets to generate cash, and then cash achieve our goals or our objectives, maybe in the short term or in the long term. So we have short-term goals and we have long-term goals. So generally speaking, investment is related to goals. People do investments to achieve their goals. So this is the introduction of the investment. Why people do investments? Because of the goals. If people don't have goals, so they will mess up. Okay? So they don't know how to channel or to invest their money. If you don't have, why you are investing your money? Okay, to buy a house in the future. So you channel your money in a particular investment class or a particular investment asset to buy a house in the future. Yeah. Or you may have another objective or another goal related to your education. If we have a little baby, this little baby, his or her own objective, goal in the future, is to be educated after 18 years. To join the, for instance, London School of Economics or to join IUG, Islamic University of Gaza, or any other school or any other university. So this is why people need investments. Okay? And this is the overall intention or focus of our text or our textbook. We will focus on the different assets and the characteristics of these assets. As I said, we have short-term and long-term assets related to your short-term and long-term objectives. We will know what is the characteristics of each asset, the stocks, the preferred stocks, the bonds, and different types of bonds and different types of stocks. Then we will evaluate these assets and to see how we use them according to our goals. So this is the main idea of studying investments. It is very simple. Okay, let's to move into our journey into investments. So we have income. The investment is coming from income. Let's see this little equation. We have income. We either this income spent or saved. Let's take very little example. If we have a salary with $1,000 or 1,000 shekel, the rational people, they don't invest or they don't spend all of the $1,000. This is the rational people. They may spend 800 and the rest 200 is for saving. So 800 is for spend. You are buying foods, paying the rents, the tuition fees, and other expenses. And the $200 is for saving. Saving, it could go to the investments.
Yeah.
The more you save, the more you invest. The less you save, the less you invest. Okay? So there is a positive relationship between saving and investments. And there is a negative relationship between saving and spending. The more you spend your money, the less save amount available to the investments. Okay? Be careful. Okay? Again, the more you spend, the less amount available to the investments. So there is a negative relationship. So we can claim that income is equal spending plus saving. Or if we want to calculate the saving, it's equal income minus spending. Okay? So the amount is available from saving is go to the investments, which is $200 or 200 pounds. Okay? So this is the amount available to the investments. The question is, and this is the big question in our textbook, how to invest the $200. Don't think it has a very simple answer. Definitely not, because it's related to your experience, related to your skills in how to channel these securities or these funds into a particular or appropriate investments. Okay? So the idea of investments is related to your skills, to your experience, how you channel your funds, to what extent you are rational in your investments, what are your goals. So we will focus on all of these things during the text. Generally speaking, people, when they are investing their money, they have different choices. People, they have different choices. They don't have one single choice. I mean the rational people. But if we have irrational people, they are narrow-minded and just focus on a particular area. So people, they have many choices to invest. And these choices called assets. Assets. You can talk about the stocks, preferred stocks, bonds, treasury bonds, securities, foreign exchange, options, and many things. The total or the combination of these assets is called portfolio. So portfolio is a combination of assets. Okay? But again, portfolio is a combination of different assets from different classes. Later on, I will explain what it means, asset classes. So the portfolio includes different choices of this man or this lady. So this lady, she has different choices. She can invest her money in the stocks, preferred stocks, bonds, treasury bonds, and etc. This area is for long-term securities, and this area is for short-term securities. Okay? Either she can invest her money in local markets or international markets. So again, it is portfolio. The idea of portfolio is you don't need to put your eggs in one basket. So this is the modern investment theory. The investment theory depends on that you invest your money, even $100, in different areas or in different classes or in different assets. Why? To reduce risk. Okay? So this is the portfolio again. It means a combination of different assets from different classes. It could be you invest your money in short-term and long-term. You invest your money in equity and liabilities or debentures. You invest your money in local markets and international markets, and so on. Let's go back to the idea of investments. This choice is linked to the people goals. So the composition of a portfolio depends on investment goals. Some people, they like to invest in higher risky assets, so they invest in derivatives. People, they want to invest in less risky assets, so they go to the bonds. People, they want to invest in moderate assets, risky assets, and stocks. So this is the things. It depends on your goals.
Yeah.
We can design your portfolio or the investment style. Everyone has his or her investment style. Okay, if we have two different people, we have a young people and we have like old people. Old people, their style is different than the young people. The young people, they prefer to invest in risky assets. However, the old people, they invest in less risky assets. The old people, they want cash flow now, but the young people, they need the cash flow in the future.
Yeah.
So this is different. Not all assets are appropriate for each finance goal, because each asset's serving a particular goal. And your mission in this class or in the meetings to know which asset is appropriate for our particular goals. We may ask some questions Okay, we have a lady and we have a man, we have a married man, we have a young man, we have people they want to go, we have babies. So please design their investment portfolio. At the end of this course, you should be able to design a particular investment style for a particular people. If you do this, it means you can pass in this course. If you cannot do this, it means you misleading yourself. Any question related to the? Any question? Assets? No questions? Okay. What are these goals? Why we need to invest? The first thing is funds to meet emergencies. Okay, like emergencies. Okay. For instance, you need them for buying things need for your life, emergencies. If you injured, for instance, and you need the money to go to the hospital, this is emergency. Okay? Or if we have a merchant or a businessman needs a money to buy things from the market which is emergent for him. Funds to finance education expenses. Generally speaking, people spend around 30% from their budget into education. Or the investment is channeled 30% for education. Education is not only related to the degrees. Companies spend 10% in research and development. So 10% research and development is education. So they invest their money for training purposes, for education, exchange experience, joining conference, having international training courses, and other things. Funds to make a specified purchase, like you want to buy a house, cars, any buildings, okay? Funds for retirement. Now you are, mashallah, you are in your 18 years old or 20 years old, and when you grow up or becoming old, you need to have a money. Because now you have a cash flow. But in the future, you cannot work in a particular factories or things, so you need to secure a cash flow in the future. So this is the goals of investments. Can you think in other goals? Why people need to invest?
To better their life.
Better life. You are looking for the quality of life. Okay, what other things? Enjoyment.
Some people have extra money. They don't know what to do with it. So the best way is to invest it, put it in...
Why they invest?
So to maximize it in the future.
Why they maximize in the future?
Maybe
Just for money. The people, not just for money, for enjoyment. People, they want to enjoy. So it's goals. When people just gambling on horses, it's for enjoyment. When people gamble on a particular horse, it means in this process, they pay their money not to increase the cash flow, is to enjoy. Because they have sufficient funds or sufficient money for in their life. Okay, what other things?
To be financially independent.
Yes, to be financial independence, particularly for ladies. Ladies, they want to be independent, economically and financially independent. So this is a goal. So she thinks to have her own investment to be independent. She can take her decision freely and with no interventions from some people. Okay, to be independent.
We just do spend.
So why?
Okay, because we want all this. I love it. Okay, I will buy it. So I have another from point of view as a Muslim. I have zakah and sadaqah.
Okay.
So it's no money. You will.
We are talking about rational people. Investment is related to the rational people. Okay. So irrational people, they are not taking investment decision. This is from the introduction of this course. I said, you should have a goal. If you don't have a goal, it means it is not investment. So now I'm asking, what are the goals related to the investments? People spending their money for nothing, so this is not investment. The idea of investments, if you want to enjoy, it means you have to maximize your money to enjoy. But if you're spending your money like this, the money will end. No extra money you will have in your life, so you will just begging the money from others. So the idea of investments, okay, it's fine to have a debate. The idea of investments is like this. This is your origin fund. The idea of investment, this origin funds to grow up like this, to meet your goals. If you are irrationally just spending the money, so it means there's no investment. If you leak your money like this, your money is leaking, so there's investments. If you talk about people, they already have a money, or rich people or billionaire, don't think their life is as easy as you think. You know, these people, the majority of them are waking up at 3 in the morning and working. They spend the time and they spend the money and they grow up their wealth by doing or working hard. Money is not coming like this. Don't think in this way. It's hard to bring the money or to bring the cash. Okay? Some people, if you have a cash, you inherit it from your mom or your dad, and you're spending like this, so it is not investment.
Yeah, of course.
Just bear in your mind the investment in working like this is you have $100. After 10 years, you will have $100,000. Okay? If your money is leaking in other ways, so it means you have irrational investments. I think this now clear. Okay, again, do you think other objectives in your life?
I think that another goal for investment, especially for governments, is to fill the infrastructure gap and poverty for their...
Yes. This is very interesting. We talk about the personal finance or personal investment, but she mentioned for the government investments to have infrastructure, and they need to do a lot of investment for this, particularly in the Arab countries. Okay? Any other things? Okay?
To use money saved in the time of crisis. And
Yes, this is for emergencies. In time of crisis. You need the money in time, if we have earthquake, for instance, like in Japan. If you don't have a saving or investments, you cannot recover from the earthquakes. Okay. The main definitions related to the investments. We have a lay person. It's like normal people. If we pick up any people from the streets and ask them what is investment, okay, what they could answer this question. What is investment? If you just from the streets, it could be knowledgeable or not knowledgeable. Ask him or her. It's a matter of research. You know this.
Yeah.
It's a matter of research to see what is the investment awareness of a particular people. Ask them one little question. What is investments? Some people saying investment is spending of money. Just spending of money. Okay, so spending of money. So where does the money come from? From my dad. And how your dad bring your money? Okay, from his wife. Okay, how his wife bring the money? So this is what people, these answers of people in the streets. Is this investment? Okay, so what is investment? If from when we say lay usage, it means the normal people. The definition of normal people about the investments. Here we are not talking about the normal people about investments. No, here we focus on the economic definition of investments. So what is the economic definition of investments from your point of view? It could be okay.
The process of selling and buying in a short term or long term.
The process of buying, selling.
The difference between the price of sell and the price of buy.
Okay. Yes. So the process of buying and selling. This is the process of buying and selling is the process of investments. So you are in the right track in defining investments. But from economic point of view, what it means. Okay, from your personal point of view, let's take some people from behind. If your personal point of view, okay, I'm not asking about the economic definition of investments. No, I'm asking about your personal definition of investments. What is? Okay, the last row, please. Yes. Say it again, please. Yes. Yeah. It means generating income. I summarize what you said is to generate income. Okay. The rest, please. From your point of view, investments. It's very simple.
I think investment maybe putting my money in the market for to get more profit in the future. Because money will facilitate the life.
Okay, it means maximizing the wealth. What other things? No, it's from in this side. Okay. Investment is related to the maximize your wealth, related to your goals. Okay? And we will go back in details about this definition. In order to invest, you join either primary market or secondary markets. Do you have experience on the difference between economic markets or primary market and secondary markets?
Yes.
Huh?
I think the primary market issues securities for the first time in the primary market, but in the secondary, the second.
Okay, try to link between investments and these things. Because the definition of investments is related to primary and secondary, yes.
The securities they born at the first time in the primary market.
Sorry?
The securities born at the first time in the
Yes,
primary market.
it is primary market.
But it is trading, selling and buying in the secondary market. So I think investment is related to the secondary market, not in the primary market.
Okay, and what is value and valuation? What is value and valuation? Okay. Yes, carry on.
Value of money differs from one period to another. For example, in the present, value of money is different than the future value of money.
Okay, you mentioned for the value. Okay, I will start from this point. To define investment in economics and the primary and secondary markets and the value. People thinking, I mean the normal people, if you pick anyone from the street, asking him or her what is investment, she said, okay, to buy stock, to buy a house. Okay, this is the investment for them. which is normal, people thinking in this. Okay, to buy a house, it is investment. But let's focus on the economic point of view of buying a house. If we think in this way, we have $100,000 to buy a house, and this is the house. Okay? It could be worth in the future 70,000 or 140,000. So buying a house as itself is not investment. The investment things is buy a house to maximize the value of the house in the future. So focus on the value. The value of the assets. It's important. When we are talking about investments, because we think security or assets is saving the value of money. Because the cash or money is keep diminishing. The value of money is keep diminishing. Let's consider this. If you have the $100 or 100,000 and keep it as a cash, see the difference now. If you keep it as a cash, look at this chart. You have $100 now, and you keep it as a cash for 10 years.
Cash has a time
So
value.
this is $100. It weighs in the future less than the purchasing power. Focus, purchasing power is diminishing. If we look at P, the purchasing power is keep diminishing. So let's go back from economic point of view. What is cash? What is investment? Investment is to increase the purchasing power of your money. This is from economic point of view. It means this house worth more than $100,000 in the future. So it has different meaning. It's not only buying the house. It's not only to have $100,000 as a cash. It's not only just buying the car. It's related to the maximize or to increase the purchasing power, because the purchasing power of the cash is keep diminishing. Your $100 today is not equal $100 after 1 year or after 2 years. So this is why we are looking for instruments or securities or asset to save the purchasing power of your cash. Do you see the link between the investments and economics? If you fail to do investments from economic point of view, it means the wealth, your wealth, keep decreasing. And like what I've done, just this $100 is shrinking. See, is shrinking.
Yeah.
Because if you don't invest, it means the $100 is shrinking like this. But if you invest, your $100 is grow up like this. Don't think this is very simple things.
Is that related to the purchasing power of the dollar or with
Yes.
the price of houses?
The purchasing power of the dollar. Because you are facing up a problem of the purchasing power of the dollar. And the price of houses is going up. So if you only want having $100, so in the future you may not able to buy a house. So you want to invest it, to find a security or to find the assets to save the purchasing power. Be careful, to save the purchasing power of your money or of your cash. Okay. Now, to save, yes.
If the investor expects that the value of the house will increase, but this will not happen.
This is a risk. Okay, yes. They do their best to evaluate the houses markets. Okay, And this is like what happened in the financial crisis. And this is the nature of the investments, because it holds risk. Okay, so we are not talking about the let's see, everything is fine. No, it's considered a particular risk. Okay, and primary and secondary markets. People invest their money in the financial markets. And we categorize financial market into primary and secondary markets. The companies first traded in the financial markets, it's called primary markets. And we have, in chapter 2, we will talk in details about the primary markets. The secondary markets, after the first born of the securities in the primary market, it goes to the secondary markets. The majority of the markets today are secondary markets. For instance, Palestine exchange market is a secondary market. Let's see, New York Stock Exchange is a secondary market. London Stock Exchange is a secondary market. All of the markets that you hear in the news, it's known as secondary markets. The primary market is only occur when we issuing shares. The first time to issue shares, it is primary markets. After this, and after fulfilling a particular conditions, it goes to the secondary markets. Don't worry about this. We will explain in details the main differences between primary markets and secondary market. Because this chapter is as introductory chapter, just to know about the main terminology in this section. Value and valuation. The value is the value of the assets. If we talk about stock, for instance, IBM, General Motors, if you talk about Paltel, if you talk about Bob, Bank of Palestine. So when I ask you about what is the price of IBM, you told me it is, for instance, $200. So the value of IBM is $200. If I ask you about Paltel, what is the price of Paltel, you can tell me it was $6. If I ask you another question related to the Bob, you tell me it is $4. So this is the value of the assets. How much the asset worth in the markets. The valuation is the process of calculate the value of the assets. So there is a difference between the value of the assets, which is the market price, or how much it worth, the assets, okay, and the valuation, how you calculate the value of the assets. For instance, if you talk about Bob, you can talk about the calculations. The price is equal D1 divided, or the rate of the price, D1 plus B1 minus B0, and B0, based on this equation you can calculate the price. Don't worry, again, we will talk about this in chapter 4 or chapter 5. Okay, just to take a journey on your subject. Any question? So far we introduce you to the investments. What is the economic definition of the investment, which is related to the saving the purchasing power, okay, and to maximize your wealth in the future. And we talk about the primary and secondary markets, and in details we will talk in chapter 2, inshallah. And the value and the valuation. The value is the value of a particular asset. Valuation is the process of valuation. Any question? It means people understand. Okay. So, return. What it means, return? Okay, this is a question for you. What it means, return? Okay, please, last rows. It doesn't mean you are sitting in the first row. It means you will answer the questions. So, to me, the priority is for the last rows. Okay? Yeah. Yes.
of return you expect to get from investing?
Say it again, please.
The rate of return.
The rate of return.
Accepted
For
investing.
Okay. So okay. Can you give me example of this? Because I try to understand what is in your mind. You are right. Okay. You have a clear idea, but do reflection, please. It means give me example.
Just for example, the return on stocks.
Okay.
Hedge funds.
Okay. From where the return coming? Okay. Yeah, you are right. Yes.
The return from securities, from stocks.
Okay. How? Fine. How? For instance, when I say, okay, the car, the engine is moving. So what? How? Okay, this oil and the electricity is coming into the engine and the story. You tell me the story. How? Okay.
The return comes from the difference between the amount invested
Uh-huh.
and the new amount of invested stocks. for example.
That's fine. Okay. Please. As you said,
Of course, a positive difference.
the return is coming from the difference between the original amount that you paid and the current value of the asset now. It's fine. Let's focus on what she said. It's very interesting. Take this example according to what she said. Is the difference between the original of your investment or the original amount that you paid, let's say you paid $100, and the current price or the current value of your asset now, it could be $120. So, for instance, the stock is, you bought the stock at $100, then now it's worth $120. So the difference between them, it's called capital gains. You see? The difference between the amount of money that you paid to buy a particular investment and how much it's worth now is a capital gains or a capital loss. It could be 120 or could be 90. Capital gain or capital loss. Okay, so far we know what it means, capital gains. I will give you another example to know or to understand capital gains. Okay? For instance, if your dad bought a house and this house worth $50,000. Okay, this is the house of your dad. Fine? He bought it in, let's say, 2005 by $50,000. If I ask you a question, what is the capital gains or what is the expected capital gains of your dad house? This is what I say to the students. Please do reflection. What it means, do reflections. I don't know you just to define. Try to operationalize your understanding. You know what I mean?
Yeah.
Operationalize your understanding. Make your minds up to do a reflection. What exactly the capital gains mean? It's just okay. Yeah, it's fine. The difference between it's correct. If we have wrong and right, so it's right. But if from a business point of view, and if your dad has a house or bought a house in 2005 by $50,000, and I ask you a question, what is the capital gains or what is the expected capital gains of your dad's house, then
How much does it worth right now?
now, yes.
Minus
Okay, you ask the
amount.
dealers, the house dealers. Okay, sir, my dad has a house in this village and how it worth? They could say, okay. And generally in Gaza, the prices is generally go up. So it worth $70,000.
So
The expected capital gains. So it means $20,000 is capital gains. You see? Similarly, you can talk about the stocks. You can talk about bonds. You can talk about everything. Even you can talk about your laptop. You can talk about your iPad. You can talk about your mobile phone. So the capital gains is related to the amount of money you spend to buying a particular assets and the amount of money that worth is now. This is a capital gains. Okay, so we understand this. Now, what is income? Yes, you.
When the investor sell the assets in real market with the amount larger than the amount he invested, we called the income or the return as income. Income is generally generated from the operating activities of the company.
Listen, please. Banat, please. Listen to this debate. I like this debate because I understand where is your problems. We have different arguments, you know this? Totally different arguments. In investments, I have, I pick up one sheet from the, I don't know what is it, some comments about investments. I will try to find them and to read it for you. Some people commenting on the investments. Okay. Some people say investment is hard because it's not just, oh yes, I think this, no? Yes. I read the reviewers of this book. Okay? I read them to see what people saying about this book. This is one of the investment students. But this investment student, he's like some people around. He doesn't care. And just leaving the classes, and he said to himself, oh, just investment is just nothing. I can read it, look at the PowerPoint things, looking at that, and we can go to the exams. Look what's happened for him. What he said, I hate investments. Yes, read it, please.
I hate investment, and also the book has everything
Take
that
this,
covers.
please.
I hate investment, and also the book has everything that covered investment. I could.
The book covered everything. Like who he hates investment. We will see why.
The book has everything that covered investment. I could not understand the concept of it. Investment.
You couldn't understand.
Investment is
Be
not.
careful, he's American, and the English is his native language.
Yeah.
Okay. Okay.
Investment is not my fault, so it was not helpful for me.
Investment is not my fault. This is not my problem because the college asking me to study investments.
So it was not helpful for me at all to understand the material covered in the text. Because taking these online classes for me personally, it was not good.
Attending the online classes, just looking at the PowerPoints. He's not coming to this meeting just to listen to the debates, because in debates we understand how people thinking.
The book was in a great condition and showed little sign.
In a great condition. Yani my challenge, my problem is not in the idiot book. I'm the idiot. You see, he said I'm the idiot because I'm not coming to the class. Carry on.
And showed little sign of wear. If I had been sitting in a classroom, this book may be possible been helpful. But due to the nature of the online classes I was talking, I had teach myself the material covered, and I was not able to do so because I did not know anything about the subject, and it was too complex for me to understand.
So, did you understand what he said? So, what is the problem? Where the problem for this guy?
He has a personal problem.
Not the book.
Yeah.
So don't say to me, okay, I don't understand. Okay, let's go back to this debate. Why? Because we have a very different arguments. You talk about the operation, and she talk about the capital. And I don't know, you understand the main difference of them or not. What she said? She said, when I sell the house, okay? The income when she sell the house. Let's just to correct what she said, and then we will go back for the other arguments. She said, when we sell, as I define, the house bought by $50,000 and it's worth now $70,000. And be careful, what I said is expected capital gains. Did you see? Did you write this, please? Expected capital gains. I said expected capital gains. So the expected capital gains is the difference, the price, how much the house worth now, and how much I bought the price. We just pick the phone asking people how much it's worth my dad's house. They said, oh, it's 70,000, 75,000, around. Now, if we decide to sell the house, okay, people coming and see the house, oh yes, it's okay, so the expected capital gains become capital gains. Now it's real.
Yeah.
You sold the house. And how much? It worth 70,000. Let's give you example. If you have mobile phone, I know your mobile phone is much better than mine. I'm just old-fashioned guy. No, just to see my old-fashioned mobile phones. Okay, I ask you, how much this worth? You said, yes, it's worth $200. Okay, give me $200. They said, no, it's not $200, it's $180. Because now it's a matter of paying cash. And people, when they are paying cash, is like shaking their hands. So, the things you expected is not as what's the real price. Okay? This is what I mean. So selling, now, okay, $70,000. It's worth, your dad may sold this by $69,000. Now, the capital gains is like this. Is B1 minus B0. It means B1 is the selling price, which is not 70,000, because the 70,000 is the expected price. So it is 69,000 minus 50. So the capital gains is 19. And the expected capital gains was 20. Your risk is the difference between what you expect and what is the reality. You see? Everything is interrelated. So this is the difference between what you are reading online and the beauty of having students in the class. Now, so far, we don't answer our question, what is income? Still, unanswered the question. What is income? Try to think before answering the question. We answered the capital gains. It's fine. So we introduced the expected capital gains and real capital gains, and we see the difference between them. Now, what is the income? Try to make your mind up. The priority is for Azza now, but be careful to have accurate answer. Try to think. Think twice. Income is not capital gains.
What I said was wrong.
Sorry?
What I said was wrong.
Yes. Let's go back. What tells students making their minds up? Let's go back to your answer. What you said is the definition of income. Okay. What you said is the definition, but I need to put in the. Yes. When you talk about, she said when you sell, but you said the operation things. Okay. So what is income now? Yes.
I said
She said selling price. Okay, minus the expenses. It's fine. For instance, he ask you, okay, if I want to sell the house, to buy a house from me, please do refurbished. It's fine. It's not change. It's still related to the, as you have an answer.
The money that you get after working in a particular job or
No.
business?
Definitely no.
No?
Yes. Any answer, please?
The initial value of assets was purchased for the first time.
Okay, let's go back to very little example. If we have Hajjah, for instance, and this Hajjah, she bought a chicken. Okay? What is the benefit of a chicken? And she want to raise up the chicken and then to sell them. What she can get benefits? What is the alternative benefits of having a chicken? Eggs. Yes. Eggs is the income. She can sell the eggs to her neighbor and having a cash. And the chicken is a chicken. The house is still a house. She doesn't need to sell the house. She doesn't need to sell the chicken.
So we can say
In this way, a chicken generating cash. A chicken generating income. You see? You see how the Hajjah is important in our life?
so we can say the interest from bonds or
income is constant. This means
So let's go back to the house. We give the rents. So rent is income. Rent.
salaries.
Yes. Rent is the income of the house. Your dad, for instance, you have 2 floors. And we are in the emergency things after the war. Your dad said, okay, you are using 2 floors. And your dad said, gather the family and said, okay, listen, daughters and sons, and particularly the important things is the wife. Okay, we are using 2 floors, and we don't need this big house. Let's take the first floor and to rent the second floor. So renting the second floor is considered as an income. It's like the chicken. A chicken, you having the eggs, it's generating income. You can sell for your neighbor, you can go to the market and blah, 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 and other things. About the stocks. From where the income, yes?
I think interest from bonds or stocks.
I'm asking about the stock.
Yeah.
You are right about bonds, but stocks.
The interest
We receive interest from the stocks?
the dividends.
Dividends.
Sorry. The dividends.
Okay, so stocks, we receive dividends from stocks. Stocks generate dividends. So dividends is income. Let's to summarize things. Some instruments generate income or generate capital gains. Maybe both. Maybe one of them. Maybe your dad saying, oh, I don't need to rent. I have my salary. I'm fine. I'm rich man. They don't need. So he just only have expected capital gains. When he sold the house, he has a real capital gain. Don't think this is from mathematical point of view as easy as you think. Because a lot of calculations, a lot of mathematical things related to the calculations of capital gains. But I'm just try to simplify things as possible as you can, or as simple as I can. Okay? By using Hajj examples, by using houses and chickens. Okay? So we differentiate between what is income and what is the capital gains. Okay? Okay, let's just to examine your understanding. If you have a car, what is the capital gains of the car and what is the income of the car? Yes, this is a question for you.
When you sell the car and you have the extra money, that's a capital gain.
Yes, right.
When you rent the car for another one, it's
You rent, or you asking drivers to work on this car. So it is income. Yes, excellent. Okay, so it's fine. Any question? Let's go back to the return. Return, in some literature, say return, this income is the current yield. The current yield, as Huda said, or the operational yield. The current yield, the current income. Because Hajjah every week has 5 eggs or have 10. She asked her son or the kids, go to the market and sell it in the market. She secured 50 shekel and she can survive in doing this. So this is the current yield, is the different terminology of income. Return, it could be measured by monetary return or percentage return. Regarding the house. So the total return, let's go back to the house. The total return of the house, total return of the house as a monetary, be careful. You know, in the exams, many times I ask students about these things and they get confused. What is the difference between the monetary and the percentage? Now, if you want to calculate the total return of your dad's house, if it is, he bought it in $50,000, and its worth now is $70,000, and he rented the house for, let's say, $2,000 a year, $2,000 a year. So I ask you, what is the expected total return? So the expected total return is B1 minus B0 plus the dividends or the income, or the current income. Now B1 minus B0 is 70,000 minus 50,000 plus 2,000. So the total return in amount, in monetary term, it's worth 20 plus 2, 22. This is in monetary units. In a percentage units, very simple. B1 minus B0 divided by B0 plus income divided by B0, which is equal 20 divided 50 plus 2 divided 50. Okay? The total return, the monetary units, it means in dollar units. In percentage is a percentage units. Okay? Let's stop here, then we will talk about the risk. Okay? Any question before moving? It's fine.